everyone. Happy Friday and welcome to Trader Tales with IBD. It's Alissa Coram here, your host, and joining me today, we've got Anne-Marie Baiynd. She's the CEO of thetradingbook.com. Hey, Anne-Marie, it's so great to see you. How are you
It is
today?
great to see you. I am glad this week is over. It's been a week.
It's been a roller coaster week. It's been a busy week. And so I'm really looking forward to digging in today, Anne-Marie, to get your thoughts on the current market environment, just where we are and how we're supposed to make tough trading decisions. Should we be going long? Where should we be thinking about shorting, if at all? Really looking forward to the great context that you're going to provide us and your perspective on the market. So let's jump right in and let's just start with this week before I guess we zoom out. Just your quick thoughts on how we made it through this week. There were some pretty eye-popping drops from some of the biggest names in the market this week, but it seems like we weathered the storm pretty well for now.
Yeah, I think it's really interesting that tech responded so poorly to earnings. And the earnings releases were not pretty. And yet the market seemed to hold that. And it really tells us a lot about rotation, right? That's something that we're seeing that's really, really big. In terms of how important this week was to close, last week for the ES and the NQ, it's the first time we've closed over very tight moving averages on the weekly formation. And so it was a do or die for the buyers in the market trying to say, hey, listen, this is a floor. And they really did the job, particularly coming into today. I think a lot of big money traders, like if we talk about hedge funds, portfolio managers, a lot of them are underperforming relative to the S&P. And so if they see things start to run, the last thing they want to do is get caught on the sidelines.
Right.
And so they're going to push more forward into the space. And then on top of that, for the last, I guess, maybe 3 days, the rumor mill that got sent out by BlackRock, who handles all the clearing for the Fed, they said, hey, listen, Fed's going to come in a little bit softer. This could really be something that says we're going to slow the taper. And then everybody goes, wow, maybe we get a soft landing. And then at the same time, there are some macro bears that are so bearish.
Yeah.
You're like, give me my blanket because I got to get under the bed. And so what we have to do as traders is really sort of say, how do I parse this into usable information, short term and then long term? And what I love to do is just look at the pictures, because that's the only thing I can go back to, because people are either talking their book or talking the inverse of their book because they're trying to get something else going on or whatever. You just are going to have to.
There's a lot of noise.
Yes.
A lot of noise out there. Yeah, I totally agree. And just for maybe those who are newer or maybe don't look at futures, ES and NQ, those are the S&P and NASDAQ futures.
Correct.
So let's talk a little bit more about how you look at the different time frames for futures, tracking the indexes, and how that informs your positioning.
All right. Before we go directly to the charts, what if anybody is interested in saying, hey, listen, what's the big takeaway here? A lot of us go for that holy grail of technical indicator, but the best technical indicator we can look at is price. And we realize that there are key levels that we have to look for. So if you're taking any notes, the first thing you want to do is see if you can get candlesticks that just give you a whole year in one candlestick. And you're going to get the high and the low. You're going to get the open and the close, and you're going to get the mid-range of all the motion. And you want to do that for your yearly candle. You want to do it for your monthly candle. and you want to do it for your weekly candle. And of course, you're going to change the weekly ones every week. You're going to change the monthly ones every month and the yearly ones every year. But all you need to look at is the last period. Mm-hmm. And so what I'm going to show you is how you can just take those simple lines and estimate, hey, if the buyers take control, this is the area they're going to walk through. And if the sellers take control, this is the area they're going to walk through. Mm-hmm. And then there's going to be that choice where you go, well, I see some things that make me go long. Right. And other people are going to be on the other side going, I think some things are going to make me go short. But the great thing about using this kind of mechanic is that you always know when you take the trade, if it moves past a certain level, where you're likely to be wrong. And so that sort of cleans things up a little bit. So,
and ultimately that helps you manage your risk, right?
Absolutely. In a simple way. Exactly. A simple way, not going, oh my gosh, I got this indicator and this indicator and this indicator and this indicator. It's, did I move up above this price? And what was the trend? And know that every important price, we duke it out, right? We just don't go, oh no, I'm going to run through that, or else it's not an important price. Yeah. It's like, it's being human. Remember, in the market, every candlestick is an emotional play between buyers and sellers, and how you feel about the particular price point and how other people feel about it. And as you know, if there's something that's really important to you, you're probably going to argue about it with your best friend, right? You're like, oh no, that's
a great metaphor. I can see it.
Exactly. So if it's not important, you're going to go, yeah, whatever. Where's my wine? But if it is important, you're going to go, oh, I'm sorry, that's not.
Pour more wine. We gotta figure this out.
Hopefully we're not drinking during market hours. That could get rough. But the fighting is going to always happen at those important levels. So a lot of times traders go, oh, you know, if that line breaks, then da-da-da. But it's really not like that, because somebody's going to come in and go, I know that line broke, but I think this. And somebody else is going to go, oh, no, but I think that. And so you're going to see a lot of noise. And so
it's not black and white. And it's ever changing too, right?
Always. Just like our moods. Because some days we get up and we're great. And some days we get up and we're like, I don't want to see any humans right now. So I'm going to sit here in my office. And the market, again, is the same. If people would get to that space where they go, hey, I'm just looking at a lot of people arguing about price, and the ones who are stronger and louder with their arguments are going to push price in the direction that they are arguing in. And if you just take that approach to looking at the candlesticks, I think there's a little bit less pressure or anxiety that you might feel, because it's easier to look at somebody and go, okay, she's in a bad mood, I'm leaving her alone. And you can look at a price, and if it's moving like this, you go, they're arguing. I'm going to wait to see who wins the fight, and then I'm off to the races. And so that's really how I look at it every day.
It makes so much sense.
For me, it's got to be easy, you know, because I overthink everything. And so I wrap myself around the axle all the time. And so in order to last the 2 decades that I've been around, I had to get to a space where it was simple enough for me to go, yes, or no, or wait. And that's really it.
Yeah. And with that being said, we're about to look at something that beginner traders or maybe traders who aren't as advanced in technical analysis might think isn't simple. But Anne-Marie, you are such a great teacher, and I know you're going to break it down and make it simple for us to understand.
I am. And because it's Friday. and because our brains are marshmallows at this juncture because of the day. So let's jump into these charts. Thank you so much, Scott, for putting those up for us. If we take a look here, this is the first thing I'm going to look at, and this is the ES, right? This is the S&P futures, the E-mini S&P futures. And the first thing I'm going to do is put it on a yearly chart. So every candle is a year. So what I'd like for you to do, if you're like, hey, I want to replicate what she's talking about, this sounds fairly simple. I think I'm going to give it a go. All you do is take out a channel marker, right? That would be a drawing tool that is in the shape of a channel, or a rectangle that you're allowed to put the divisions in. And you simply draw the line that goes high to low. And that gives you your range. And in mine, I have a midpoint and a 75% area and a 25% area. Great. And you can see, look at what happened when we got all the way down here and we lost the low of this year. This is what I'm talking about in terms of fighting. So let's say, everybody likes a deal. Nobody wants to pay too much for anything. And so
if you're Elon Musk, I guess.
Right? Oh my gosh. It's crazy.
I'm neutral. I just had to throw it in there because he paid too much for Twitter. So I had to we'll move on now.
Yes. So good for today. Good non sequitur though. Very good. So let's say you get to this low and you're thinking to yourself, oh, everybody's going to buy. What you have to remember is this is an important level.
Yeah.
And anytime you get to that space where you go, this is an important level, people are going to fight. They are absolutely going to fight. And I actually just removed this one, but I'm going to replicate it. Okay. And I'm going to make it orange right here, but I'm going to put the open of the year right there. And I'm going to make it orange.
White is positive, blue is negative.
Negative, correct. Yep. Correct. Wow, this software is taking a lot of computing power to work through.
Yeah, social life.
So no problems. No problems. We'll just leave it with yellow as it goes right now. But it's actually supposed to be orange because you want a color code that tells you, hey, listen, I want to know that this number is my yearly high or my yearly low or my yearly open or my yearly close. So
great.
This is what we have. Once we do this and we're thinking about what's going on, when it comes into these levels, we know they're going to fight. They will not just simply go, oh, that was last year's open. See ya. Or that was last year's close. See ya. But see, what happens is people go, oh my gosh, we just lost last year's close. We're going to all die. And so everybody immediately goes, oh, I'm going to short. And the speed of motion will let people jump into that area. And there'll be a lot of folks that'll make some money on the short side. But as soon as it starts moving, you're going to see that buyers will come to the fore and say, all right, it started holding. I'm going to give myself a little shot. So now you want to go to the monthly. And for my monthly candles, I use a green channel.
Great.
It's the same thing. It's my high and my low. It gives me my midpoint. Yep. And I also just erase these for my open and my close for the month because it was way down here and we almost immediately picked it up. Right. So notice what happens. We come in to the prior year's low. Remember, that's what this orange one gives us, the prior year's low. And immediately people go, value, I'm buying it. Yeah, here we go. And for 2 months, they're rewarded. They buy it here. This month it goes up. The next month, it starts up, goes all the way to here, hits the 50% range of the entire year, and then it begins to back down. And so if you're a trader just looking at these edges and you go, ooh, I just bought this and I'm in a little bit of a bear pattern, what should I do? Where should I take some profit? And the profit is going to be, one, can I get to here? And if I can hold the edge of this, can I get into that 50% range? And this area, you're going to go, okay, well, that obviously is support. If I start losing the edge, I need to take some profit. And that is.
And trust what you were doing, Anne Marie.
That is exactly, when I looked at that, I said, all right.
Yeah.
If I'm losing that 50% range, I did have a pretty big bounce, but if I'm losing that, I want to see what it looks like here. And if I cannot hold that, I have to short, right? And so notice this wick right here. And again, that's 74.06. Okay.
Great.
This wick here, when I come in and I go, I'm going short, the question is, where's your stop? Right? And so for me, I could say, listen, I'm going to make the 50% my stop. That's pretty far away. I'm going to look for something a little bit closer that tells me if I bounce up into that area and I lose it, then I can do some more shorting. But notice that happens sometime during this month. So if you look at this and you go, okay, I'm losing this level, and then it turns around and starts moving up, you know that it can go here. So the question, if I decided, hey, it's come down into this area and it looks like a short, if it starts moving up, I'm going to get out, because I know if it starts moving up, I have this entire candlestick that I need to watch. And it could go all the way back up the top. But as soon as it loses that level, I'm going to be able to short it again. And I'm going to be able to stair step down. Notice I stair step here, it loses the edge. Where's it going to go? It's going to go into these guys. And if it goes into these guys and I go, well, I probably ought to take some profit, I would say, hey, I probably ought to take some profit. I have no idea if it's going to bounce. But what I don't want to do is, one, go long, or two, not take any profit in the space, because I absolutely do not know what's going to happen here. So I do take some profit, and then I just keep walking it down. Well, if it can't recapture here, it's going to go here. And if it can't recapture here, it's going to go here. And if it can't recapture here, I know this is a big level, so I'm going to go ahead and take some profit, just like everybody did here. And if it heads lower, I'm in great shape. And the second it starts creeping up over the top, I'm done. And really, I know you look at that and you go, man, that just sounds way too easy.
You make it sound easy.
Now, here's a very interesting thing. Let's look all the way to the 30-minute chart for today.
Yeah. A quick question before you get into this is, because, I mean, you're looking at monthly candles to make decisions, but that's in conjunction with other time frames, right? You're not like, oh, I'm just looking at monthly candles.
Correct. Now, what I will look for is the confluence of, okay, that's also a breakout. That's also a breakout. So like today, this blue range here is this channel, this big blue channel is my prior day. And so I come in, this is my prior day's close. And I come into the morning, all I have is a VWAP. I come into the morning and I look at this and I go, all right, here we are starting the day. You can see the volume picking up. And so I'm thinking to myself, okay, I'm above the VWAP. This is my opening tick. This is also something you want to have. You always want your 930 open. If you're sitting above your VWAP, that's a volume weighted average price.
And yeah, we just had Brian Shannon on IBD Live this morning.
Yeah, absolutely. And it tells you if it's sloping up, that people are making money and they're continuing to buy to add to their position. And if it's sloping down, people are either losing money or are positioning themselves short. Right. And if it's sideways, it means it's a mosh pit and it'll go from support to resistance and back to support.
Great.
But if you're just looking at the levels, this was the close of the prior day. And so as soon as it breaks out, notice what happens. It's an important level, right? Every channel you build has all the important levels attached. The high, the low, the midline, and then you can add your opens and closes, right? For your 930 here. This is where it closed yesterday. As it comes here, you expect people to take profit or try to short. Why? Because they have a bearish mindset.
Right.
No matter what, that's something you always need to anticipate. Anticipate somebody's going to be bearish. But your thought should be, wait a second, if I'm above my VWAP and it's sloping upward and I just am above the close, I'm going to go into the prior high of the prior day. And notice again, look what happens. They get there, they breach the top, and guess what happens? People take profit and they try to short. That's what's going to happen at every important level. What do you have to say? You have to go, all right, let's see what happens when they decide they want to short. Let's say you decide you want to short and you say to yourself, okay, I see this moving up. I see this closing down. So I'm going to short it right here at this edge where all these three candles are. And that's going to be my stop.
Yeah.
The first target should be where everybody else has been buying, down here. If you think your target's all the way down here with all of this motion, you're going to get stopped out. You are. And so a lot of people might say, well, why would I even want to go short? And my response would be, exactly. What you're thinking about is what happens when people try to go short. Buyers come in and go, thou shalt not pass. You're not going to get to go. And so the great thing is when you look at this and you go, all right, that's where everybody's at. If I buy it here, my low edge of the wicks in here, or even this wick over here, that's going to be my stop. And I'm going to carry on through and I'm going to do what? I'm going to stay long as I make a higher low and a higher high.
Right.
So here's my higher low and a higher high. I stay in. Here's my higher low and higher high. I stay in. Guess what this is? That's the midline of last month's range. So what are people going to do? They're going to try and short it. But notice there's so much bullish action that when it breaks out and they go, okay, I'm shorting it, it only comes back into the high of these prior candlesticks. And then it's off to the races again. Higher low, higher high, higher low, higher high. You move your stop up, and then you just keep going. Higher low, high, high, higher high, higher low, higher high. First one here. This one says, wait a second, I have a lower high and a lower low, but I'm still above the most important level.
Yeah.
So as soon as that goes there, you can draw a line right here and go, all right, that's my new stop. And then it breaks out again. Higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. And you go into the end of the day. The question might be, do I want to hold into next week?
Right.
And because the markets are so volatile, that's a really tough decision to make. So one, you should take some profit. But if you go back to your weekly candles and you go, all right, what did I accomplish? Here, remember, orange is yearly. And so now you are moving up again from the base of last year's low. Now you're at the 25% range. Look at this. This, it almost has this on the nose right here. So this obviously is where the traders are going after. You might go, what do you mean obviously? How do you know obviously? What's obvious about that? When a price that's important has been tested and held, the first thing traders are going to say is, all right, let's go to the next ladder, right? It's like, I use this example all the time. It's like we're pirates fighting each other on a great big staircase. And there's no in between. It's either one stair or the next. There's no in between. And so the traders are going to try and push up into this area. And if they do, they're going to be sellers that are going to sit around here. But if they pull back and they can hold the close of the week, see, this is what I would be doing. I do this at the end of every week. I will take my old week and I will move it into the next week. And notice the difference in the range. See how much smaller this upward range is as opposed to this candlestick. But as I mentioned, I don't have a moving average sitting in here. But this was the first candle that we closed over the weekly 5 simple moving average. That's the first time we've done it. This is the second week. So buyers are going to get more brave. They're going to get braver. And so when we come in on Monday, we're going to look at something and we're going to go, all right, where is it? If you're thinking to yourself, I don't want a whole lot of risk, but I really want to go long, what are you going to look for? You're going to look for the pullback into this last super important level that broke out here and all of these guys sitting in this place. And you're going to go, you know, if it comes in there, I'm going to try and buy it. And I'm going to leave my stop as, all right, here's what I would do. Let's go to the daily. I got to tell you, this has been truly one of the groundbreaking things that I've done for myself as a trader in terms of going, you know, I'm just looking at price. I don't want to see anything about what people are thinking from a moving average, from any kind of technical indicator. I just want to see from the big picture, where did I open? Where did I close and what was my high? And we'll see that this is a very bullish candle. We close, I mean, very close to our highs. But notice this. If I say, hey, I'm going to come into this area, the 25% level or the 75% level, and pull back, now I have the confluence of the 50% range, the weekly 25% retrace range of the new week, and the 75% range of the daily. And so everybody's looking at 1, 2, or 3 of these. And by everybody, I mean the majority of big money that's moving in to these very simple patterns, right? They just will move in incredibly simple patterns. It just looks very noisy because when they come into an important edge, everybody's got to fight about it. And when they fight about it, it makes a noisy patch.
Yeah. That makes so much sense. Anne Marie, I have a question for you, and that is, you know, I feel like for a lot of traders, it's hard to flip that switch from long to short. How are you able to do that? Is it because just of your understanding of the mindset of both sides of that battle that you can be so flexible, or how do you do that?
I have to tell you, every day I get up, I have some sort of bias as to direction. So the one thing I've done to help myself is I think to myself, you know what? I'm going to trade with the trend. So
Mm,
today, when I came in, I said, all right, I'm looking at my 30-minute chart. I'm above my VWAP. I'm above my midlines. I'm going to go long,
mm,
and I'm going to wait for the pullbacks, and I'm going to go long on the pullbacks. So most days, I just move in one direction.
mhm,
If I move back and forth, it does get muddy in my mind,
mhm.
simply because, I think it's just part of that human condition of make a decision and stick to it. That part of us that we're always taught, don't waffle around,
Yeah,
just
be
stick to
decisive.
something. And
Mhm,
so my mind does get a little muddy moving from long to short or and back and forth.
mhm,
But on a day like yesterday, where I had this moving down and it
mm,
came up over the top of my VWAP and came right into the double top. Remember, a prior resistance level with a flat to downward moving average is
mhm.
probably going to have sellers waiting. Really, it's as simple as that. So you think to yourself, all right, I know I was going to be long, but in order to stay long, the buyers have to win the pullback. And
Mm,
so I know that they're going to try and sell up here. And so I go, all right, I'm going to see how far up they go. And then I'm going to watch them lose it. And then I'm going to jump in. I'm just going to see because I know after they go high and then start pulling back and then I go short, I know what my stop is
mhm.
because that's where all the sellers were if I want to take that short. And so what I'd be thinking to myself is, hey, this was my opening tick. I think I'm going to go long over here, right? So when I look at that and I go, okay, I'm going to take it short, but I know the buyers are going to come in here because I breached this. I've got higher lows, higher highs. Things are
Mm,
going to look good for me. And I take it long here. The first thing I want to do is make sure that I hold the low of the prior candlestick. And so here, look at this very closely up here, you can see I lost it, but then I start holding it. And so if I take a long up over here, this wick defines my stop. Now,
mhm.
here's the great thing about this. You can do this on a monthly chart, a weekly chart, a daily chart, a five
An
minute
infinite
chart,
chart. Yeah. Mhm.
anything. It's completely fractal.
Yeah.
It's all the same because it's humans making decisions about price. And a lot of people go, well, yeah, but it's algorithms. Guess what? A human wrote that algorithm.
Yeah.
And so that natural human tendency to go, all right, I'm going to follow this is going to be in there. So here's
Right.
the very beautiful thing. Let's say you look at this and you go, I want to go long here, but you move up. And again, like I mentioned, you can do this on any time frame. So let's say you're staring this down and you go, I wonder how much of this uh, candle I'm going to move to.
Hmm.
So you can draw a line right there.
There you
If
go.
you can't get above that 50% marker, there's a problem.
Yeah.
So you can look at that and go, oh, I want to go long here. And I'm moving up. There's the 50%. And then I can see these guys. I'm going to trim my profit. And I'm going to say, you know what? All right, it's losing that one. If it loses this one, I'm just going to take my profit and get out. I'll wait until it comes back, holds the line, and then I'll start moving again. And what immediately happens here is that price action pops up and then completely fades. And remember, even if you choose the wrong side, if you go, you know what, I'm going long. I'm going to go long as soon as it gets above here. Once it starts rising and you cannot get up over the 50% line of that prior candlestick, you know that people are not coming with you.
That makes sense. That's great. Yeah. Anne Marie, I feel like you unpacked so much for us. And I feel like what it comes down to is that it can be so powerful to just analyze price and
Exactly.
put yourself in the shoes of the buyers and sellers when you're thinking about your own decisions and your own biases and being aware of that.
That's right. And to manage the risk, because
Yeah.
listen,
Yep.
I can't even tell you how many traders I know that really wanted to learn to trade, but they ran out of money. And the reason they ran out of money is because they did not manage their risk. Now, listen, it's great to be capitalized, but in order to manage what you have, you really need to make it very simple and focused in terms of, okay, where am I going? So if you go, hey, I can't trade on these bars, I got to take something swing, I got to look at a swing trade, then that's where you look at something like we set up at the beginning of the week, where we said, hey, listen, as soon as we start climbing above this old high, we're off to the races. And so we're going to walk by this one, and then we're going to go to this one. I was surprised that we went all the way up here. I had a feeling we would go here, which is why I have all these notes about, hey, listen, this is that range that you want to watch for your target. But it really is as simple as that. And you can look at it and go, you know what? I'm going long here in chart X. And if it loses the low of, last week, or the low of this last 4-hour candlestick, or the close of the last week, wherever it is that you put your risk, you can say to yourself, all right, I'm ready. I know exactly what it is that I need to do here, and let the chart do the work. Don't freak out and second guess and, oh my gosh, it's not, because it's sort of like, you ever play that crazy game where it's called pipes, and you turn the pipe in a certain way and water goes through it or fluid goes through it?
Yeah, I know what it is.
You know what
I
that
know
game is,
exactly
right?
what you're
I'm
talking about.
always playing those little puzzle games. But it really is just like that. As soon as the valve opens and it begins to trickle through, the force of motion of all the traders rushing through to get to the next price place will force price up into that edge. That's where it wants to go. So you know where it wants to go. If it doesn't get there, you know you've got to stop. And so the key event is know where the stop is. And when it gets through the flow point, let the chart do the work, and then let it go up into the next level. So for instance, next week, you're looking at something like this. You expect a little bit of a pullback. So you watch for that. As soon as it opens up above this area and starts moving, you can go, you know what? I'm going long, and my stop is going to be down here. Why would I go long and not short? Why would, and Marie, this says high and then low and then lower high and lower low. Isn't this a natural lower high? Potentially, yes. But think about where everybody's sitting. We're all sitting waiting for that pipe to open. We got to go through. And so that first press up is very likely to give us some good price action. What we can do is, let's say, a day like Friday today normally carries through on Monday. Here's some really interesting things. If Friday starts taking off in any direction, do not put a trade in the other direction. You never fade Friday strength. Whatever Friday's doing, if it turns into trend, do not get on the other side of it. It's going to continue. And so today's one of those days. Took off buying. Everybody was like, ooh, I'm long. And we went right into the edge. So if we're gifted a pullback in the overnight or on Monday morning, we're going to watch for it to hold this range.
Yeah.
And as soon as it breaks up to the top and gets over it, we're in. And we know where our stop is. Because you're right, it could turn around and fade. We never know where it's going. What we do have bounds on is, what's my risk?
Yes. So well said. And I feel like that's a great game plan for Monday's open, Anne-Marie. So, or the trading day as the new week kicks off. I just want to get your thought on, as well as we look to wrap up here, on when do you feel like a trend is getting too extended? Do you worry about that? Or is it all about, look at these levels, if it retraces a little bit, then holds, then breaks through,
so
because
that's a great question.
Yeah, because we've had a bear market, right?
Yes. So know this.
Expectation be, or the thought process.
The last bear market upside rally we had took 7 weeks, right? Here we are, 1, 2, 3, 4, 5, 6, 7, 8 weeks. This was our last bear market rally. So a bear market rally can last a long time. For the 2001 crash, there was a bear market rally for 4 months. So the question isn't what's 2 months ahead of me. The question is, if I position now, what do I need to be careful to look for that tells me there's weakness? And if you want to go back to those little pipes, pretend we're all sitting at the pipe and we're all in our little, let's say we're all a bunch of rubber duckies. And we're sitting in the pipe and we're waiting for the lazy river to open up so we can go do our thing. If there's not enough water flow, we aren't going to move forward. We'll just sort of bob and sit around. And so here's how it looks. Here's how a bob and sit around looks. All right, here we are. First break in the prior month, gonna lift. We get here, we gap up.
Yeah.
And then we move all the way to the top of these ranges. And then again, whenever you come into a candle that you're trying to retrace, you draw yourself a channel. I'm going to tell you, this is absolutely golden. If I could draw it straight. And you say to yourself, all right, 50%, awesome, look at that. 75%, all right, well, I better not lose 50. The moment that it starts losing 50 and you look to the left and that's old support, you can see with other candles, you get out. You take profit.
Yeah.
So it's about watching for slowing and reading the signals instead of going, you know what, they're going to hold support. See, that's what we have a tendency to do. We have a tendency to look at price action and dismiss it because we're sitting in a trade that requires something else to happen. And so no, see, if that actually is happening, this trade's going to go belly up. So I'm just going to cross my fingers and go, you know what, this thing's going to. So what you always want to do when that happens is take a little profit and raise your stop. Take a little profit, raise your stop. This is not the kind of market where you can go all in and go to the beach. 2020 was that market.
Right.
All in, go to the beach. This is not that market. And so you've got to be a lot more engaged and a lot more alert. But you don't want to do this on 5-minute candlesticks if you're looking for something that's going to give you 2, 3, 4, 5% or whatever. Like, if we look at Cigna, that thing is exploding, right? Which is where a lot of pharma is
Right.
just shooting the moon right now. So this is a literal Maribozu candle. It must be just off of the edge of its high. And so it's a clear breakaway. A lot of traders came in here. Guess what? Next week, if it holds it and breaks out, you don't want to think to yourself, wow, that's just moved up too fast. I'm not doing anything there. If it's going, it means the pipe opened and everybody's running. The second it loses the edge, then you go, all right, let me see what I want to have as my risk. If you just jump off if it just goes straight green and it moves up.
Right.
Because the second it starts losing this edge, it means that that water flow, that price flow, the traders moving into that space are just becoming fewer and fewer. And really, here's what happens. The moment we buy something, what do we become? A seller.
Yeah, that's true. That's so true. I guess unless you add to your position. But.
Yeah. True. That's very, very true. But if we are looking at, we won't, well, you are right about that, depending on the motion.
No, but I get what you're saying as well.
At some point, you're like, oh, yeah, I'm going to have to sell that. And so the fewer people that end up buying.
You're selling before you're buying. Maybe you're locking in profits into strength and buying.
Exactly.
Yeah.
Right. Which is, trading around a position.
Right.
But again, this sort of simple flow mechanic is really going to help you keep on the right side, even for messy things like this, right? If it moves straight up and it comes over the top, you can go, you know what? I'm going to go long if it gets above here. But if I start losing that candlestick, I need to be concerned about, if I entered there, I need to be concerned about my risk. Right? And so, my thought is always buy support. Don't buy breakouts in bear markets.
Yeah.
You buy support action.
Yes.
Just buy some, especially if you're doing a short-term cycle. Like for Cigna, you want to buy this breakout if you have an intention of, listen, if this rolls over, I'm out of here.
Right.
Right? In that particular candle. But for most of these, it's, here's where we're at. And so I don't know if Cigna is one of the big companies doing buybacks and people want to get in front of that before their earnings. Whatever the case, this one, moved like a rocket. And so ultimately we expect it to come back just a little bit and then move itself forward. But really, all you have to do is say, okay, if this breaks out over here, I'm going to buy it, knowing that if it dips back into my candlestick, I don't have the strength that I thought. So either I cut to half size or I completely get out.
Great. So much great knowledge, Anne-Marie. I feel like we were just scratching the surface. I feel like that always is what happens with you. Want more. So that just means we'll have to have you back on to continue to unpack all of this great knowledge that you have. So thank you so much for sharing with us today. Really
I love talking about the markets. I do.
Oh my gosh. Yeah. I love it. Awesome. Really appreciate it. Thank you so much for coming on. And yeah, again, we'll have to have you back on, and appreciate everyone tuning in. Hope you have a great weekend. And if you're not watching this live with us, which we appreciate all the live viewers, but hope you're enjoying this with your morning coffee over the weekend or into next week. A lot to learn and absorb here, and actionable takeaways as well that we can take into next week. So thank you, Anne-Marie.
My pleasure. Thanks for having me on. You take care.
Take care. And take care, everyone out there. Have a great weekend.